Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. And the bears are making the case that a big drop in stocks starts next week, while Goldman is making the case of why you might stay in. Let's head over where we start off with Metre, where we pick up the CTA positioning. Mind you, these reports are proprietary unless without express permission. I cannot show you the details, but we can talk generally of where they're positioned. Now, these CTAs, these are momentum traded machines. They're systematic, meaning they follow a formula. And right now, the formula to buy in is overhead, meaning stocks have to rally to hit these triggers. And right now, all these machines are at max short levels. But let's continue on, because let's talk about now the case that Goldman is making that maybe the stock market is about to skyrocket higher. And here we see the Goldman notes that peak blackout is today, this being on Friday, and it says October 31st, happy Halloween, reopens the buyback window, and November, December opens the best 2 months period of the year for buyback executions, as corporations tend to flood the market and buy their stock back at an estimate of $5 billion per day. But one thing we don't know yet, and of course we won't learn until we actually get into corporate earnings, which start next week, and that is, are these companies going to honor these buyback commitments? Remember, they don't have to. Or are we going to hear in their earnings announcements that they're going to suspend their buybacks? That would be the bearish case. They also note that 65% of corporates are in the open window on Halloween, and that is, again, the largest on record, as a buyback desk forecasts a whopping $1.1 trillion worth of executions for 2022, and yet the market, my friends, is down. But how about the CTA positioning? Well, let's take a look at what Goldman has to say. 1 month, they're saying, is it looks bullish in a flat tape. Stocks going sideways. Some of you said, what does this tape mean? In a flat tape, it means going sideways. The CTAs are buying $15.6 billion over a month. Not a big deal. If it up modest, get this, $100 billion to buy. Now we're talking some big numbers. And up big, we get into these short coverings, $190 billion to buy. Down modestly, only $13 billion to sell. Not a big deal. Big down tape, that's $36 billion over the month. So you notice that we're starting to see these machines get to the levels where they're not really selling that much. Now, it doesn't mean other things won't sell if the market stays down, but at least from the CTA positioning, we're seeing them really holding their positions. But Goldman also notes in their bull case that the mutual fund year-end is also on Halloween, and mutual fund cash sits at an all-time high, and this won't be the case as statements are akin to hit investors for the third quarter, and mutual funds are going to look to try to deploy this cash as quick as possible, perhaps through the year-end. And of course, Goldman notes that they expect the energy sector to be a big beneficiary as mutual funds take this cash and buy what is already up. The question will be is, will retail investors go to their brokers and say, hey, you know what? I want out. This isn't working, and that cash disappears. We'll soon see. Now let's take a look at what TD Securities, their position on their models not moving. They appear to be also at max short. No sign of movement there. Now let's take a look at momentum on the S&P 500. We note that it is negative. The RSI is below 40. That implies that momentum is to the downside on the relative strength indicator. MACD now has a negative cross. Momentum Timer Pro, my proprietary momentum report, shows one consecutive daily buy signals, but don't worry, this will get reversed. Those that are on the subscriber list, when you get your report on Monday, there is a little chance that this will stay a buy signal for 2 days. I'll bet it shows a sell signal. Next upside target unchanged at 370 to 371. Downside target, break the recent lows of 348. We note that Momentum Timer Pro is now showing, and many people ask for the sell side signals. We see a max sell in the 1 month, 3 month, and 6 month, all showing no sell signals, and that is accelerating. Let's take a look now at the charts, because the big picture here isn't all of that bullish, and I want to take you through that. All right, let's pull up the charts here, and what do we know? We're on the weekly charts. And one thing we've talked about in prior shows is when you get to these oversold conditions on the weekly, you get a bounce up to around 50 or so, low 50s on the RSI, and it tends to head lower. If it does, it tells you you're in a bear market. If you you get back to that next oversold position, well, usually what it means is there's another big drop in stocks coming, or a waterfall move as liquidity just blows out and we hit a financial crisis. That's where we're sitting now. And what that means is if we zoom into the 5-year chart, we know that could easily take us to 322, but I don't think that's the big move. I think that's the beginning of the move. Possibly we even get down into here 288 level, 281. You'll notice the volume profile of the last 5 years is heavy here around 280, but you break, of course, these pre-pandemic highs and you're going to see a lot of people sell, and they're going to be watching the market here. Now, another thing we should be looking at is the volatility index. And we note that over the last 5 years, it's sitting at pretty elevated levels. When the Fed is doing quantitative tightening, it tends to lead to heightened volatility. This thing breaks out over 36. There is your big plunge in the market. All right, let's take a look now at the tech stocks, QQQ. And what do we see? Momentum on it. Also negative RSI 34, MACD negative cross. Momentum Timer Pro, 5 consecutive daily sell signals, predicting that will be 6 when you get your report on Monday. Upside target unchanged. Downside target, we've hit all of those. Break the recent lows of 254, and we see potentially the bottom coming out on that. Let's take a look here on QQQ. And again, notice there's not a lot of volume traded here between these zones. Tells us that once this gets unwound, there's not many people have bought here before. You easily break those pre-pandemic highs, get down to this 220 level, and that, of course, creates that next big bear market move lower, and that will lead, again, as I've said, panic selling. Let's talk a little bit about the bond market here. No changes from Metre. Everything sitting at pretty much max short positions, unchanged for that. How about we head over to Goldman? No update from them, so we stick to the 1-month charts. Remember, last week we had the 1 week where even in a down big tape, and it wasn't down big, it was just down a bit, they sold. But over the month, and we talked about this before, that the trend now is that there will be buying. In a flat tape, we see 49 billion to buy, up big tape 136 billion. Down big tape, they're still buying in a down tape, meaning if bond prices go lower, what this is implying is their machines are buying. So even if prices just hold flat, we should see buying support from these machines, because the way they work is at their targets to buy back in or cover their shorts decrease over time. And hopefully here in a few weeks, I'll have a report for you. I've been working on mimicking this, because I know many of you have asked for it. Hey, can you give us this on a more consistent basis? And yes, the answer is we'll have that soon enough. All right, let's continue on, because we note that TD Securities also sitting heavy short positions on theirs. Likely direction, again, they start short covering to buy. And that tells us that we're seeing yields sitting at a massive level of resistance here. Now, from a momentum perspective, what do we know? RSI on the dailies, oversold. MACD negative cross here on TLT, 16 consecutive daily sell signals. Again, from a momentum perspective, there's really no position here. If you're looking to trade this, your upside target is thin at 101, 102. You're almost going to wait until this changes, because even on a 1-month max short, 3-month, 6-month mid positions shorting, I mean, the market is hearing, Momentum Timer Pro is saying, hey, heavy shorts here. Now, hey, if you're wondering what this Momentum Timer Pro is, it's part of the Markets Insider Pro package. I'll put a link up here in the corner and description below. MarketsInsiderPro.com includes Momentum Timer Pro, Jeff Snyder's daily, and Tracy Shoe Charts weekly that are going, she said, bi-weekly with more trade tips. All right, let's go back to this and note that what we see on the charts for TLT, what is maybe the bullish case? Maybe we need some good news here, and that is the selling ought to likely come to an end. For the main reason is TLT is usually hang out at this level it's getting to for a long time, and seeing buyers come in here. So the downside risk to this is probably near term coming to an end, and that means big short squeezes to the upside. At what point, don't know, but we'll soon find out. If again Goldman's machines start to buy, look to the rest of them to start and coming back. All right, how about the metals? Gold, we're seeing big short positions on gold. Again, those of you that like the CTA reports, you know when they're heavy in one position, that means at some point they're going to trigger a short covering and a rally. How about otherwise? We know momentum is positive on gold, but probably not much longer. I suspect this will change on the Monday report. RSI now under 40 at 38. MACD negative cross. Momentum time broke 10 consecutive buy signals, but guess what? Didn't lead to anything, and I think that turns to a sell signal. Upside target, we dropped that down a little bit to 157, 158. Downside target 149. The big picture here for gold, not so pretty. Here we can see on the gold chart, we're in a topping pattern. We've seen these before lead to big downside moves. Again, my base target here on gold futures is around 1300, which would be consistent of what everybody says was a cup and handle that was going to break out to ridiculous highs. Didn't happen. Again, telling us the risk downside to gold. And again, 1500 is your first stop. 1300 probably more in line with where it settles down. Let's talk about the ongoing trade of the week, currencies, because there's, well, nothing really else to talk about. And what we see is everything is still short the dollar. Again, the longer these things are short the dollar, not short, short everything against the dollar. Let's get this right. Everybody is long the dollar because there's a dollar shortage and short everything against it. Now, at some point, again, the way these machines work is over time, their signal to cover shorts or buy back in decreases and eventually triggers. We're not there yet. But let's take a look at the dollar because it indeed is going to wreck the economy here. And what do we know? The US dollar ETF, UUP, momentum positive, RSI 62. MACD's got a negative cross, but that hasn't slowed it down a little bit. Momentum timer pro, this should say 7 consecutive daily buy signals. And you can see right down there, a little typo on that. Again, we still suggested holding a position in this. Next downside target has been moved up, move the stop losses up. I'll just say this, if you're trading this, when we look at the chart here, probably the opportunity at this point is if you're comfortable with it, to use call options, not expose yourself to a lot of risk when you see a parabolic chart. If you're looking to get into this, it's realistically probably too late. All right, let's take a look at UUP again. Going parabolic here, not something you want to trade unless, again, that's why I said take a look at options if you're going to do that. Probably the safer bet. Reduce your downside exposure if you're wrong, and you don't have to take a big swipe at it. Where does this head? DXY 116, get there 120, outside of 120, well, then this sky is the limit, and of course that breaks the markets. There's your bear case. You've got sky high interest rates, sky high dollar. It's going to be tough to see all these flows turn the market around, but we'll see if Goldman's right, and if not, well, we'll certainly talk about that next week. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.